Okay, so we're gonna check if Mastercard are overvalued or undervalued based on some just statistics. So obviously Mastercard has a PE to get a notepad as well. So Mastercard has a PE of what appears to be 35. So the PE is 35 times. And the average growth rate is expected to be 17%. This is just a forecast, so this could be raised or lowered. Now, their past 5-year growth rate in terms of EPS. Now, I actually don't know what it is, but we can figure it out if we just ask ChatGPT. So if we go to calculate there we go. We just show them that. Obviously there are 7 pieces of data in that image, but I want to see what they do here. I think they'll just do it like front to back, so they're starting from 367. Interesting. No, start from front to back. Why do they start it from there? No, they're not doing it properly. But okay, let's just say, it's around 17%. Let's just take their word for it, right? Obviously they're calculating more figures than I want. I'd rather them do it with 11.83 and 79. Let me see. Actually, can you do it? 83 and 7.94. Oh, these are diluted values, not even the basic ones. Alright, I mean, it's fine. Okay, so it looks like the compound annual growth rate is seemingly around 10%. Obviously, it's just minus, but that's because they did it in the wrong order. Yeah, they're not doing it correctly, but basically it's 9% past 5-year CAGR. So when you take into account that Mastercard has grown 9% on average in the past 9 years in earnings, and the expected growth for the future is going to be higher, that's good. But at the current valuation of 35 times earnings and the 29 times earnings forward PE, it's a bit of a stretch, especially for a credit card company. They do have a moat, like Visa, Mastercard are both like the biggest credit service companies in the US. But again, like, so they're their revenue compound annual growth is around 10%, 10 to 15%. Their dividend growth isn't very consistent. They seem to have increased it, and then they decided that they wanted to cut it in 2022. So as a result, I'm actually going to take off Mastercard from my list of investments, because the only reason why I'd get Mastercard is for the diversification and the dividend. But you can see in the past 5 years, it's not actually, I don't think it's actually outperformed the S&P 500, because the S&P 500 has grown, let's see here, 86% in the past 5 years. So Mastercard has underperformed. That's just a fact. So I would not recommend Mastercard for that very reason. Forecasts, you can see the value will contract to 16 times by 2028. That's the prediction. But the problem is 16 times is still, it's just about acceptable for the stock, just about, based on the fact that it grows 10 to 15% annually. Then it would become fairly valued, but that's in 5 years. And again, it's like, who knows what AI could do for these companies, who knows. But right now I wouldn't touch Mastercard. Let's see Visa. Visa again has underperformed the S&P 500. They haven't cut their dividend though, which is good. Valuation wise, they're a little bit cheaper than Mastercard, and their PE would contract to less by 2028. So Visa's a better option, but the fact that they've not grown much in the past 5 years is a big problem. Let me see Visa's actual compound annual growth rate. %, and 5 years is 10 years. So yeah, quite underwhelming as well, to be honest. Get that out. I was trying to check Saia. Now Saia had a big tank recently. I don't know if it's recovered or what. Yeah, it looks like it's already been recovering. Big tank. Went even as low as 377. I wonder what the valuation was at 377. Would have been 27 times. What's the predicted growth rate? 15%. Contract. The forecasts have a decent level of contraction. Yeah, their earnings haven't done well. In some quarters. And they're a trucking company. Is this industry is there much room for growth in this industry? It's not very innovative. But they are one of the biggest in there. And they've grown more than ODFL as well. XPO also had a big fall off as well, I think. No? Or maybe I'm wrong. But XPO is very overvalued. 50 times PE for barely any revenue growth. In fact, the revenue's halved since 2017. I hope I haven't put this company as an asterisk. Let me check. No, I haven't. What did I put their revenue as? Yeah, see, that's not good. The returns is good, but, well, except for the past 3 years. Yeah, it's not good enough. I'm just saying buy. I mean, their earnings are expected to grow, but I don't like the volatility in the earnings of XPO. Let's look at Primerica. Primerica. I think it is Primerica. Decent PE ratio, decent forward PE, decent dividend, but the revenue growth is appalling. It's appalling, honestly. So that's why it's got a low valuation. 5 years, just about outperformed the S&P 500. Really, you would buy this for the dividend, wouldn't you? And it did tank a lot as well. In fact, people were saying that they were overvalued when they tanked on their last earnings report. And then they're not the biggest company in this sector either. Yeah, and this sector doesn't seem to grow a lot either. Insurance, life, so they're rated as a hold as well. And yeah, the contraction's not going to be that much. Like, literally just for the dividend, you would get this, I think. But let me see what because it's not always about the dividend growth. Like, you have to have a lot of patience to weather like a dividend growth stock. Sometimes it's not worth it. I'm not sure if Primerica is worth it. Okay, Life MD. Where is Life MD? Okay, grown a lot in a year, but it's taken a lot of nosedives after reports. I mean, 12 to 792 is crazy, and they're also not profitable as well. Why did I take them despite not being profitable? They're expected to be profitable in 2025. Yeah, I don't know. I think PE wise, have they ever been profitable? Let me check. No, they've never been profitable. They'll have a 2021 XPE. Yeah, I'm sorry, but they're overvalued as well, so I have to take them off as well. I'm not sure why I had them on in the first place. Okay, Core. Okay, decent PE, good growth in 5 years, pays dividend. Okay, this is looking good. Engineering constructions industry, rated a buy. Not much valuation contraction. But they are up so much year to date. Wow. So 212 divided by. So before they went up 70 something percent, they had a 13 times PE. Damn, I should have gotten into them. I'm not sure why I ignored this one. Whenever they get sold off, I'll probably look into this one. Actually, you know what we'll do? We'll just put on trading 212. If they ever go sub 300 again, which I don't think, I mean, it's possible. If they go sub 300, it's going to go to ISA. If they go sub 300, I will definitely look into that. That's a 20% decline though, but yeah. Take them if they go sub 300. Do I have them on my watch list? Yeah, I've already got them. Okay, so oh yeah, did I look at Molina's valuation? Molina's got a good valuation, just about outperformed the S&P 500. They've been declining recently. So they've already taken their their nosedive. Compound annual growth rates are looking pretty uncertain, but it looks about 10%. They're buying back shares. Forecasts look good. Yeah, Molina's decent. I just need to kind of go. There's not much coverage on this stock. I think valuation wise they look good, but for a 17 billion company, not a lot of people cover them. I mean, maybe it's because then they're quite small in this healthcare plan sector. There are bigger companies. Cigna has grown more, as has United Health, who are the biggest. United Health have had a lot of setbacks this year. Are they overvalued? I mean, growth-wise, they seem to be pretty good. Yeah, I think United Health are quite decent actually. I'll put them as a question mark, just because of the hackers recently. I just need to do some more research into that. What else was the one? It was Cigna, wasn't it? Or Relevance. Yeah, Cigna's been paying dividends now, which is good. I just want to see. They've not been consistent with it though, which I don't like. EPS is not consistent like United Health. Growth is. Why did they grow so much in 2019? Must have been an acquisition or something. Contraction looks nice. Long-term history is pretty good as well. What's their just check their compound annual growth rates. 2014 to 17, kind of underwhelming. Okay, let's check United Health. Yeah, United Health is a lot better. And they've had setbacks as well, so yeah, I'd probably say United Health is the best play, and then Molina might be decent. Let me just check Molina's. But Molina's like really small in this sector compared to the others. Yeah, like I said, you pick between Molina and United Health for healthcare. But MedPace I think is on top. Let me just check. Mastercard, Kinsale. Put them as energy. Industrials. There we go. I think that's fixed it pretty much. So let me just check now. I just want to make sure MCore is not in the same industry as They're not in the same industry as Top Build, are they? Surely not. Let me see. Oh, they are. Yeah, they definitely are. Alright, let's just put... But yeah, Top Build and MCOR have decent valuations. Well, Top Build's growth is not particularly good. The EPS growth is great, but the revenue growth isn't consistent. It's been poor recently. Yeah, I have to look into those ones a bit more. Dominican Freight Line, let's look into that one. It's gone down a lot this year, yeah. It's finally taken its pullback. Dividend is nice. Let me just see the forecasts. Yeah, the forecasts are not bad. Yeah, forecasts will probably save this one as well. So, yeah. So this is a short review of these, pretty much, just to assess what are good opportunities and what aren't. I would basically say ASML, TSMC, MedPace, United Health, Umcor. I forgot about Visa Energy. I need to check them as well. ODFL are good options. Visa Energy looks cheap. Yeah, so I conclude that. Oh, and also let me just remember what was I saying. So Saia was actually quite expensive. Sorry, so yeah, I wouldn't look into Saia. So yeah.